If you look, there's about 200 companies globally that hold digital assets. MSTR has an AI software business that generates about $500 million a year in revenue. So they have about $60 billion of Bitcoin. More of their assets in digital assets, but if it goes through, I don't think it will be the end of the world.
From the desk of Kingsley Advani.
Most DATs do have operating companies, so MSTR has an AI software business that generates about $500 million a year in revenue, but that's about less than 1% of their total DAT portfolio. So they have about $60 billion of Bitcoin. So their total assets, their digital assets exceed more than 50% of their total assets. And that's the issue that MSCI has, that DATs with more than 50% of their assets in digital assets could be excluded. So it would be a pretty big event. MSCI has about 15 to 20 trillion dollars of assets benchmarked on the indices, and many sovereigns and pension funds track the MSCI indices. So they allocate a basket of their portfolios towards stocks on this index. So it would be pretty bad. JP Morgan expects about $2.8 billion of selling pressure just for strategy if it gets delisted, and that's about 5% of its total market cap. So it would be pretty bad. I don't know if it will go through or not. If it does go through, it would be pretty bearish in the short term. But zooming out to the long term, there were only 38 DATs on the list that could be delisted. And if you look, there's about 200 companies globally that hold digital assets. It's still a small fraction of the global pie. There's about 4,000 public companies in the US and about 50 to 100,000 public companies globally. So I still think we're very early. I think many corporations will acquire Bitcoin, and there'll be more companies that own less than 50% of their assets in digital assets than more than 50%. So it's a small section. I do think MicroStrategy should be allowed to hold more of their assets in digital assets, but if it goes through, I don't think it will be the end of the world. Yeah, I think the 50%, it is quite a good one, but I think more systematically, I think leverage could kill the industry, or at least in the short term. If these companies have too much leverage or too much debt that they maybe become forced to repay or forced to sell their Bitcoin, I think that's more systemic. So looking at the leverage ratios could be more interesting. Recently, MSTR mentioned that if the MNAV falls below 1x, they may be forced to sell Bitcoin to buy back shares. So it could cause selling of Bitcoin. I'd say there'll be more companies that diversify their treasuries, that just hold less than 50% of their assets in digital assets, because then you have 4,000 public companies in the US, 50 to 100,000 globally. So there'll be a larger percentage that just hold some Bitcoin. Yeah, I think on one hand they could be seriously think it's a risk to their index, or they could be playing some regulatory arbitrage where they have competing products like ETF products. MSCI is owned by Morgan Stanley, so it could be Morgan Stanley wanting to offer different types of products and have less competition. JP Morgan as well, who wrote some reports on this, they're also offering some products as well. So it could be they're trying to reduce competition. I would add that some of the more successful DATs, so if you look at Michael Saylor and Tom Lee, they're great communicators, they're very efficient, and they have long-term vision. On the communication, you want the DAT team and CEO to be on TV a lot, ideally, and to be speaking to investors, doing investor roundtables, and just very available to all stakeholders. They shouldn't be hiding or avoiding. So the communication needs to be very strong. You also need to be very efficient. You need to have appropriate compensation structures. We recently saw Procrat adjust their compensation so that it's not all cash-based, that it's tied to performance milestones, and that it's majority equity-based. I think we'll see more equity-based compensation, and so you won't have big cash salaries and spending on private jets or things like that. So we'll see more efficiency in the successful DATs, that they're able to pay for their expense through their income, and that they're profitable, cash flow positive, and that they're building efficient companies. Also, one other metric for this is their dashboard. They should have very transparent dashboards that should go up very quickly after the raise. And I'd say finally, on the long-term vision, it's not a short to medium term, it's a long term. How can they build multi-decade generational companies?